Welcome to the Daily Update, where I'll go over the action in the market for Wednesday, August 6th, and we'll see how things look for Thursday, August 7th. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. Okay, we were up about 0.75%. We regained the 20-period simple moving average. Mega caps had a good day, but we're still seeing some under-the-surface weakness that continues to develop. I'll show you what I mean by that as I go through the charts, but we're back to being positive again on all time frames, where after Tuesday we dropped below the 20-period simple moving average. Now we're back above it. Okay, so right at the open, we had a higher open and prices chopped. There wasn't an awful lot of conviction right in the day, but there started to be some conviction as the day unfolded. We chopped above and below the daily pivot at 63.12, so we're back above that 6,300 level. And then we were able to finally break out and climb above R1 at 63.34. And we just held on to the gains. It was kind of one of those smokestack days where you see a move up and then we just kind of drift for the rest of the day. We couldn't seem to get above 63.50. Another round number, psychological point right now. That's pretty much where things stopped. We were up 0.73% and volume was above average. So we are seeing some participation here. And we're back to positive on all time frames. Interest rates are going back up a little bit now, but we're still well below that 4.5% level. And there were some trade news and tariff things kicking in. We finally got some news this week that seemed to drive the market a bit there. All right, so some comments. Apple, they'll announce or they have probably already announced it by now, $100 billion investment in domestic manufacturing. They announced this at the White House. They had already announced that they were going to do $500 billion. Now they bumped that up. And that's a positive sign. When companies are willing to put their own money out there and invest in infrastructure, especially with AI, that's seen as something really positive for the economy. Then India, on the tariff front, which is the largest manufacturer of the Apple's iPhones, they'll face an additional 25% tariff. So now they're going to have 50% tariffs. We just couldn't seem to reach a deal with India. We've been friends with them. And in the first Trump administration, India and Trump seemed to get along well. Well, India wants to buy Russian oil, and then they resell some of that oil. And that didn't seem to sit very well with what the current administration is trying to do. But at the same time, Apple will not be materially affected by the tariff. So even though they make a lot of iPhones, the iPhones aren't going to be hit by this. So that was seen as more positive, and it really helped Apple's stock. Then the Swiss president, Karen Keller-Sutter, apparently came to Washington to talk out a deal, but was not able to reach a deal to lower the looming 39% tariff rate there, but didn't seem to have much of an impact on the market. And President Trump stated that his Middle East envoy, Steve Witkoff, had a highly productive meeting with Putin, though no further details have been reported. So it's like, okay, yeah, they had a good, nice little chat there. We don't really know what they talked about or if they agreed to anything, but apparently it was highly productive. The market didn't seem to really budge on that either. Could have tanked, could have went up even more. So we're back above the 20-period simple moving average. Mega caps had a good day, but the rest of the market, not so much. A little bit of an improvement here and there. And we're still looking extreme with the intermediate term oscillators. The PMO, it's negative. It's below its moving average and declining, but still giving us a very high reading. And we're seeing that across some other oscillators that I'll show you. No change with the Fed. They're kind of, last week was their week to shine. This week they're just kind of backing off a little bit here. And the dollar was down. That helped stocks. Interest rates were up, but we're still below that 4.5% level. We're at 4.22% with the 10-year yield. Sentiment didn't change. and we're positive. We're at the 55 range. If we tick down one notch, now we're back into neutral. So we're right on the verge of between neutral and positive. And we are positive as far as what's going on with the trend. The green line is still above the red line, but it's a weakening trend. It continues to weaken. The ADX is coming down below its moving average. And with the up day, the bias is positive. I'm still keeping the momentum at mixed to positive because we're seeing some under the surface things that are a little bit unsettling right now. But we have to follow price. And in Wednesday's session, the price of the S&P went up. Okay, we just had one report, and we get it every week. It's not a market mover. I just like to keep track of this. Gives us an idea what's happening in the real estate area. But the mortgage application index, it was up 3.1% this week. Last week it was down 3.8%. And then they break it out into refinance and purchases. Well, the refinance index was up 5.2%. And the purchase index was up 1.5%. So here's a chart of that, just showing how last week it was negative and it's gone back. We're seeing a lot of up and down, up and down, up and down. Interest rates are moving around quite a bit. We go from these periods of time where the economy is looking better and then it's starting to look weaker. And that can have an impact on seasonality of buying homes and so forth. All of that kind of works together. All right, here's some charts here. Consumer confidence, how people are feeling about things in higher stock prices, and then they compare that with the trailing valuations. This is when I do the intermarket analysis video over the weekend. This is when we look back at previous earnings. That's what's already happened, the trailing 12 months. And that's not what the stock market uses to justify prices going up or down, but it's still can be excuse me here, it can be a useful analysis tool. You can see there's a general wave as the PE ratio, that's in red, and consumer confidence, they tend to go more hand in hand with each other. Okay, two bulls that look similar so far. They're trying to draw a comparison. When we finally bottomed in March of 2009 up until 2020, when we had the whole COVID lockdowns, they're trying to draw a parallel between the two. Well, if we end up sticking to this pattern, things will look good, at least for the foreseeable future. But there's some major bumps along the way. This is like 2018 here when we had a pretty big downturn. We had the mini crash on Christmas Eve. Of course, then you have the whole COVID thing that plays out and so far. Okay, then historical and projected capital investments for U.S. cloud and hyperscale providers. This also is well for the economy. You've got all this money going into this, and you can see the huge increase in all of these companies along the way, and that's really helpful for the economy. Earnings growth for the S&P 500 rose 8.7% in the first quarter to 9.9% in the second quarter. So we're seeing that bumping up a little bit. That's also justifying stock prices going up. And then net profit margin, it dipped a little bit in the second quarter here. We're down in this kind of, I guess, lighter blue area, but they do project it to go back up looking forward. And then gold gains on rate cut bets. Okay, we're just kind of tracking gold right now, which it was really going up as stocks were going down with the Liberation Day announcement. And then it's just kind of gone sideways here. It's held on to its gains, but it hasn't really been breaking out. It'll have a few bad days, and then it'll have a couple of good up days, and it's kind of treading right now. Then corporate buybacks, and I've been talking about this, where we're seeing a little bit of a divergence where companies are coming out and saying, yeah, we're going to buy back our own stock. In fact, this hit a record. I showed this same chart, but it had a different background in yesterday's video. But we're seeing a real drop-off in the people that work in those companies. Are they buying shares of the stock for the company that they work for? We're seeing that dropping off, but the companies themselves are making big announcements. Now, it's one thing to make an announcement. It's another thing to actually follow through with it. So we want to differentiate between the two. And then ownership of stocks by household, still very high, dropping down a little bit here, but this is how most people still produce their wealth, is in the stock market. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. All right, here's the chart. Not much of a conviction right at the open. We did open positive. The futures were slightly positive, and we just kind of gyrated around. It's like, okay, what's this going to be? Well, then some things started to come out that made it look a little more positive as far as the news, and we got above R1, but then we just topped out here at the 6350 level, not even close to R2, and that's pretty much where we stayed for the whole day. And not much of a change in the initial overnight session here, but we did see the futures were just kind of hanging around, not really showing an awful lot of conviction, but having a bit of a positive slant. So we saw most of the gains actually happening during the cash session. This is still looking good here. Intraday chart, growth to value, the blue line's above the red line. And this is looking good too. S&P, intraday growth to value ratio, still going up. We started that nice upward trend right after the 1st of July, and we've been pretty much heading in that same direction. It's never a straight up line, but that's why we try to look at it in a bigger context. So growth was up, value was also up, but quite a bit less. Now the mid caps, they suffered a little bit. Growth was down, but down less than value, and very little change here with small cap growth and value. So we're still chopping along sideways with the small cap growth to value ratio end of day chart. A little bit of an improvement near the higher end of this recent range that we've been in with mid cap growth to value, but in looking good, but not really breaking out to a new high here with the S&P growth to value ratio. This is still looking good. The growth to value ETFs where we do a ratio here, and still kind of going sideways recently with the discretionary to staples equal weight ratio. Now, Tesla and Amazon had good days, and that's the big part of discretionary. But I look at the equal weight version of these sectors, and so they don't have as much of an impact. Here's our trend, still weakening, going down below the moving average, but the green line is still above the red line. That's the short term. Also in the intermediate term, ADX is down below the moving average, but still positive with the green line above the red line. And we were slightly above average here with volume. You see a little green here with the histogram. Not much, but still above average. It's still below 20 with the VIX and declining a little bit now, both on a closing basis and with the bar chart. But we're a little bit concerned here because if you go back to 1990 and do a seasonality study here, August going up until the latter part of October, possibly even into the early part of November, this is when the VIX has a tendency to go up, and that typically means stocks are going down. Not seeing an awful lot of that. We have a down day, but then we have an up day right after that, and there's not a lot of conviction currently here. And we're coming back down a little bit above the moving averages with the VIX of the VIX, the volatility of the VIX itself. Still right on the borderline here with the skew index, coming down to the lower end of this red range here. And so the market is still expecting something big to happen. We're just not exactly sure if that's an upward move or a downward move. It's most likely an upward move, but then you've got a lot of people who know about seasonality being negative in August. And if everybody knows about it, the opposite can quite often end up happening. And even though we've been coming down with the VIX lately, the MACD that measures the momentum of the VIX, it really picked up that spike. And so it's still showing that the momentum is up. And we ticked up just a little bit with this fear gauge and ticked up with this other fear gauge. So we had an up day, but the fear gauges saw a little bit, not very much, but a little bit of fear coming back in. We did see an increase in the daily chart of the equity put call ratio. We're continuing to go up here, and this is more negative. When we get to really low readings, that means that the market might be topping, or at least there's people concerned about it. And so we're seeing a real increase in the puts that are being bought right now. They're outweighing the calls, and people use puts to hedge either individual stocks or indexes. And we're also continuing to go up with the 10-day chart. And this is not what you would expect. The mega caps had a pretty good day, but the high beta versus low beta ratio, it declined almost a full percent. Now, in the bigger picture, we're still positive since this has been going up, but to see this go down on an up day, that's a little bit of a concern there. And coming down after getting very high with the volatility risk premium. As I've been mentioning, we didn't really see this in the VIX. This gave us that high reading right about Thursday of last week. We opened right at the high and then went down Thursday and then Friday. Well, since we have been gyrating around now, this has been coming down, but we're still well above the band. Advanced decline line, again, not much of an improvement here. We were up 0.75%. Didn't really see any advance here, both based on price or volume. They actually declined slightly. And we're still below zero and declining with the advanced decline oscillator. We're a little bit negative with the short-term advanced decline ratio. We did decline a little bit, but we're above zero with the intermediate term advanced decline ratio. And going down with the 5-day and 10-day moving average chart of the highs and lows. To go up, you would think that we would see more green and less red, but that's not a lot of internal strength happening. Now, we did turn back to positive with at least some of our smart money indicators here. We were just barely below the moving average yesterday. Well, now after Wednesday, we're slightly above the moving average. And the boom indicator, which is still giving us a negative divergence here, this has been going up, as this, for the most part, has been going down. We're back above the moving average. So this one is positive, but we're still negative with the chicken money flow. The red line continues to decline, but we're back to positive with the chicken oscillator. We saw enough of a bump up to get back above its moving average as it's moving higher. But we're positive here with the vortex. But again, excuse me, to have an up day like we saw and to see the green line coming down and the red line going up, a little bit of an apprehensive interpretation there. And we're still above the moving average with the NYSE common stock, but it was flat to slightly declining, flat to a little bit declining here with the S&P advanced decline ratio. We declined, but still above the moving average with the mid caps, and we came back down to the moving average with the small caps. Still below zero with those, 50 with those stocks inside the S&P above their 20-period moving average. That was virtually unchanged. And we actually declined with the 50-period moving average study, although we're still above 50. And we declined with the 100-period moving average study and the 200. Okay, so to be up with the S&P and to see these going down, a little bit of a negative divergence there. Short term, though, now we are looking okay as far as the chart pattern. See where we had the gap down on Friday, and we've been setting so far a series of higher highs and higher lows. Now that's very short term, and that can be broken at any time. And we're still above this pivot point, and that's more positive. That's a pivot point for August. So can we get back up here and break out, or are we just kind of keeping price close to this gap? Because we filled the gap when we had the solid up day, and we really haven't been moving. We had a down day and then an up day after that. So Monday filled the gap. And we actually saw a little bit of a decline with the 20-period moving average study, and it's below 50. We declined, but we're still above 50 with the 50-period moving average study, and a little bit of a decline here with the 200 moving average study. But a bit of an improvement, but not showing real solid momentum. The Stochk RSI did go up, but it's still below the midpoint. We're slightly above the midpoint with the Williams percent R, still a little bit below the midpoint with the CCI 14, and a little bit above it with the CCI 20. So no real conviction when we take all these charts together. And still not extreme here. In the short term, since we had the update, we're back above the midpoint. We're turning and trying to go back above the moving average in the midpoint with the intermediate term, but we're still declining with the long short term stochastic. And we did go slightly negative. Really hard to see, but it's barely green there, but with the force index, but it's below the midpoint. And still seeing some vulnerability. We've spent, 4 trading sessions now, kind of below these lines, and that's causing them to roll over. Now, if we can get back above them and turn the lines back up, that would be more positive for the short term. We're just not seeing that yet. And we did recapture the 20-period simple moving average. And we're a little higher above the midpoint here in the +1 channel with the standard deviations chart. But we continue to see a negative divergence here. We've been going up with the S&P. We fell back. Now we're, for the most part, going up again here. But the balance of power is below zero and declining, and still more neutral with the go no go with the lighter blue bars, and a little bit of an improvement back above the midpoint with the highest high lowest low value chart. And this is more of a time factor. We're now 67 days into this positive trend that we've seen here. Usually when we get to about 40, that's according to the Landry Light method here, that's about when things tend to change and go the other way, but it still continues on for the time being. And we're still positive and adding more bars here with the proper order chart. But here's another negative divergence. We're still going down with the TTM squeeze as we were going up with the S&P. And as we're trying to go back up a little bit here, the TTM squeeze still continues to drop lower. And we're just barely negative here, minus 1.7 with the ease of movement. And coming down a little bit after being extreme positive with the Arun, we are seeing a little drop off here in buyers, whereas sellers are almost non-existent. So that's what's causing the oscillator to go down. And McClellan oscillator, it actually declined, and it's further below zero here. So we're still going down with the summation index based on price and volume. A little bit of a tick down with the NYSE McClellan oscillator. We're also below zero, so we continue to decline with the NYSE summation index based on price and volume. But we're still going up with the swollen trading oscillator. We're below zero, but we're, even when we had the down day, this still was going up, and it's going up even a little bit more after Wednesday. But here's where we're dropping down. We're just a little bit above this red line with the PMO, but we're below the moving average. So it's still giving us an extreme reading, but it's declining below its moving average. And we're still declining based on price and volume. Not much of a change here, still below 50 with the PMOs that are rising, declining a little bit more with the buy signals and also below 50. And we're seeing this dropping off a little bit here, the PMOs that are above zero. We had been getting high readings going back to May. Now we're starting to see this continue to drift down. And we've got, this is weird. We've gone from negative to positive to negative back to positive again with the Elder's Impulse system for the S&P. We're still negative with the parabolic SAR since the dots are on top. And then momentum, the MACD continues to go down here. The slope oscillator continuing to decline. All of our oscillators, short, intermediate, and long term, are still declining. Some are still giving us pretty high readings here. And we're also declining with the Copic curve. A little bit of a change up in the green area, slightly positive here with the Sean trend meter. We ticked up, but we're still below 50 with the ultimate oscillator. We're still above 50 with the money flow. And we're still above the moving average with on-balance volume. Still above 50 with the intermediate term and short-term RSI. And we came down to this blue line here. That's a 30-period exponential moving average. We were able to get back above the 20-period exponential moving average. But you can see the green fluorescent one, the short-term 10-period simple moving average. It's flatlining, and that's about where we topped out in Wednesday's session. And little bit of vulnerability to the intermediate term trend. You can see the red line and the blue line starting to roll over a little bit. The longer we stay below both of these lines, the more they will roll over. If we can get back up above these, that will help the lines go back up. And we're back above the 20-period simple moving average here. And I wanted to show this. This is another, when we had that gap up after one of the trade deals with China was announced, that set a low that we can kind of work off of here, and we've been able to stay above that. So this is more positive with the anchored moving averages. And we continue to decline with the bullish percent index. We're up almost 0.75% with the S&P, and this continues to go down. This is part of the weakness that I'm talking about. And we ticked up just a little bit here. Actually, we were down slightly with the NYSE bullish percent index, and we're still below 50 and declining actually quite a bit more here with the NASDAQ 100 bullish percent index. You would expect them to be positive, and they were actually negative. So still kind of hanging around here with this little mini rainbow, which is the 20 period simple moving average of the open, high, low, and close. We haven't been able to break above that. And still doing okay here with the weekly bars, but we're below this R1 level. If we do try to go up, we'll be watching the 64.68 level here as possible overhead resistance. Then looking a little more positive with the Heiken Ashi, we have the open candles here. We're positive since it's black and pointing up with the Kegi chart. The Renko chart is positive, but the three-line break is still negative. No real confirmation there. Still looking pretty good with our 150 and 200 period moving averages. And we did improve here. We've been on a full-on sell signal with the Zohorchak method. We were at a -10. We've been able to bounce back up to a -6. Now that's still negative, but it's an improvement from the reading that we were seeing before. So we're still negative in the short term with mid caps, but all the other indexes are positive on all time frames and still positive with the bonds based on price in the short and intermediate term. Commodities are still negative in the short term. Now the dollar, since it's back to declining again, it is now negative on all time frames. And we saw discretionary and staples. Those were the two better performing areas, but discretionary did a little bit better. Tech, which is a growth area, that had a pretty good day. Communication was up as well. And then more of the defensive areas, healthcare, energy, real estate, they ended up being down. So we had a cross above 6,300 with the S&P, but then the NASDAQ, first it crossed below 21,000, then it went back above it. Then Canada doing pretty good there, setting another new all-time high. And then we have a bullish MACD crossover with staples. Now that's more of a defensive area. So the fact that we're seeing some strength there. Now discretionary did okay, but we want to keep an eye on this. Then eventually the NASDAQ got above 21.1. Then real estate, it's looking more weak now. It had a BPI cross back below 50. So you can see here, Google, Meta up, Nvidia was up, but Microsoft was down. Apple had a good day. That kind of helped the index. Amazon and Tesla were both up. This helped discretionary do well. But then you can see a lot of red in healthcare, which is defensive areas. So there wasn't an awful lot of conviction that we saw here. We're still below the pivot point with the Dow, but we are in an uptrend. Neutral with the Elder's Impulse system for the diamonds, and still above this pivot point and going up, and so far looking fairly constructive with the NASDAQ. And we've gone from negative to positive, from negative back to positive again with the Elder's Impulse system. Still a little bit above this long-term trend line with the NASDAQ 100 weekly chart. And here is the NASDAQ 100, also looking pretty good, still in an uptrend there, but not really breaking out, at least yet. And again, another negative, positive, negative, positive there with the Elder's Impulse system. But the momentum continues to drift lower, and it has been doing that going back to about the latter part of May. About Memorial Weekend is when we started to see this divergence. We did recapture the short-term 20-period moving average with the QQQ, so that's looking a little more positive. Small caps still above their 50-day moving average. They were virtually unchanged to slightly lower here with the S&P 1600, generating a recent golden cross with the Russell 2000 small caps, even though they were down 0.13%. Neutral with the small caps when looking at the Elder's Impulse system. And we were down almost 1/3% with the mid caps, still below this pivot point after generating a recent golden cross. So that puts all the indexes that I follow anyway, they're all in uptrends now. The small caps, no, not the S&P 600, but the Russell 2000, that's in an uptrend now. So that's positive in and of itself, but we're just, negative, negative, neutral, back to negative again with the mid caps. And still hanging in there okay in an uptrend with the Wilshire 5000 as well as the total US stock ETF. Now this is a bit of a concern here. We were up over 0.5% with the financial sector, and the chart by itself is looking okay. Where we're concerned is, you see, we're getting a death cross now when we do a ratio with the financial sector to the S&P. That's underperforming. Is this giving us some kind of early warning sign here? Because this hasn't just been happening lately. This goes back to about May when we started to see this underperformance, but support had held. Now we broke below that support and we're turning negative with this ratio. And we were up almost 2% with the FANG index. Those are the really big stocks. That's what really led the day on Wednesday, but we really haven't broke out of this range. So Apple was up over 5%. They liked the news about the iPhones and getting back above the 50-day moving average with Amazon. It was up 4%, where Microsoft was down 0.5%, and Meta was up over 1%, but not setting a new all-time high. Google was up 0.73%, not really breaking out, been kind of range bound lately. Nvidia was up 0.65%. So, I mean, it was up, but not real with a lot of conviction there. And then Tesla, which has been all over the place, it was up 3.62%, coming back up to its moving averages. Netflix finally saw a little bit of a bounce here, but it's still below its 50-day moving average. And this is also a bit of a concern. We're seeing the semis continuing to underperform the tech sector. Now, the market can still go up, and it was about a year ago, if you go back to 2024, when we saw a really solid move up with this ratio. And then we hit the summertime, and this ratio started to go down, but the stock market was holding up quite well at that time. And a little bit of an improvement between US and world stocks in the short term. We're still drifting lower here with the longer term correlation. Oil was down, getting a little bit below the midpoint into the 64 range. And we're coming back down again with the dollar. And then the latest reading from Truflation coming in at 1.74%. They recalculate this every day, where we only get the CPI number once a month. And coming back down now, interest rates were up, and that could have put some pressure on stocks. But as they started to fall, that helped stocks to maintain their gains, and we're moving a little further below that 4.5% level with the 10-year yield. And we were down just a little bit here based on price as well. We're back to neutral, I guess you would say, with the yield curve between the 10-year and the 3-month. We're right at zero. They're both giving the same yield right now, and still looking okay with the Qs to S&P. We saw a bounce back up here with discretionary to S&P, but it needs to get above this and have the moving average turn back up. But when you compare large cap growth to value, that's still looking pretty solid. So we're above the moving averages now with the large caps, mid caps, and slightly above it here with the small caps. So what's the outlook? We're still dealing with earnings season, and that's been pretty good, and that's been keeping the market together. This is actually incorrect. We're back to positive on all time frames here, but we're still seeing some weakness internally. And we're going to get initial jobless claims on Thursday and productivity and unit labor costs. For this week, these are probably more of the influential reports that we're going to be receiving. Then in Friday's session, we're not going to have anything. And we'll also get wholesale inventories as well as consumer credit. And then any new trade news that comes out, tariff announcements and what have you. So here's nothing coming out on Friday. And we'll get jobless claims. There will be a 30-year bond auction on Thursday. Again, I don't really pay attention to those too much unless they're either really good or really bad. And that can have an impact on stocks. Seasonally, not much of an edge here for August 7th. We're neutral to positive with the Dow, S&P, and NASDAQ. And here's where we see during a post-election year, a little bit of a bounce up before we see some weakness as we head more into the middle part of August. And August, going back to 1950, during post-election years, we have yet to have a positive August during those time frames. And then this also shows the weakness that we often see during post-election years for August. This also, so we're seeing this through a number of different charts here, the yellow area where we drift down for a while. But it really hasn't started all that much. We had that big down day on Friday, but we've been trying to get back a lot of that ground. So we're just not seeing much movement overall right now. So I still have these on the negative side here, even though accumulation distribution and the Chaikin oscillator are positive, the Chaikin money flow. Now, we have a good day on Thursday, and we see some conviction. These could easily go back over to the positive side. And we're still negative with the McClellan oscillators and summation indexes for the S&P and NYSE. Parabolic SAR is still negative. We're still negative with the 20-period moving average study. And the bullish percent index, we're actually seeing more weakness here with the Nasdaq 100, and we declined on an up day with the S&P bullish percent index. The oscillators continue to drift lower. Ease of movement slightly negative there. The ultimate oscillator is below 50, and the momentum for the Nasdaq 100 continues to be negative. And then the long-term special K oscillator, that continues to be negative as well. And we do have a sell signal, but we're showing some improvement here with the Zohorchak method. Then the positive side, still looking pretty good with the growth to value and discretionary to staples ratios, as well as the Swindler trading oscillator. It's still going up. And the NYSE bullish percent index is still above 50. That's why I'm counting it as positive. The money flow is still above 50, and the vortex is positive as well. And the financial sector is positive, but we're now seeing a death cross here. It's underperforming the S&P 500. And here are the pivot points for Thursday's session. With each video and course, members learn to implement the consensus approach, a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, explore the SPX investing program and start with a 30-day free trial. So the conclusion, we're back to positive across all time frames because we were able to get back above the 20-period simple moving average, but we're seeing not only the trend weakening, but not an awful lot of positive conviction. One or two good up days could just take care of all of that. But at the same time, a couple of bad days could switch that more over to negative, where we're still looking positive, but seeing some weakness developing in the intermediate term, but we're still looking pretty solid now in the long term. So thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.